right now. The problem today is the currency is being devalued at 20% a year, not 7% a year, right? I turned up the heat in the frying pan. And the second problem is, what is inflation? Inflation is the rate at which the things you want to buy are going up in price. Inflation is a vector, it's not a scalar. And what are the things you want to buy? Well, you might want to buy pizza, might want to buy Netflix, but you might want to buy a house. You might want to rent a house, but if you want to rent a house, it might not go up in price as much as if you want to buy a house. What if you want to buy a house in the middle of Manhattan? It might go up in price differently than a house in the middle of Kansas. What if I want to buy food? What if I want to buy energy? What if I want to buy a Picasso? Or what if I want to buy something truly scarce? What if I want season tickets to, the baseball game? What if I want health care? What if I want early retirement? They're all things you can buy. You can buy assets. You can buy luxury service. You want to buy a Rolex? You want to buy a Maserati or a Porsche? Luxury goods? Or do you want to buy commodity goods? And there are some things you don't have to pay for, right? They're ad finance, right? Streaming YouTube. What's that? What's the inflation rate on streaming YouTube? Ad finance, right? So the inflation is the cost of stuff. If the money supply is expanding, that means the currency is devaluing. If you had a large portfolio of stocks or assets and you went into this pandemic, after the Fed ended up expanding the money supply with the interest rates going to zero and the expansion of the M2 monetary base, the money base, you found that you were actually 25, 30% wealthy or doing nothing. You could have done nothing the entire year. As long as, right, the only mistake you could have made is do something, right? If you had $1 billion and you did nothing for the entire year, you had $1.3 billion at the end of the year. On the other hand, if you had a Main Street company and you're generating, let's say, $100 million a year in cash flow and you're valued at $1 billion because of the cash flow, you would have to be generating $130 million after a year to be valued the same, because the value, the assets that the money buy is being devalued by 30%. If the currency is devalued at some rate, and the money supply expanded to 24% last year, so you could use that as your metric, or you could use the S&P 500's return as another metric. But clearly, the currency devalued, which means that if you're a Main Street company, you had to work 20% harder to get nothing. And if you're a Wall Street company, you had to do nothing to get 20% better. Bonds hyperinflated. Cost of bonds doubled in 3 weeks.
Whoa.
That's hyperinflation. Equities inflated. They were up 40%, year over year. Cryptos inflated. Bitcoin was up 400%. So the cost of scarce art, the cost of luxury real estate, all of that stuff inflated, or hyperinflated. What didn't inflate? Things that people can't buy, right? If I define a market basket of highly manufactured goods that have very low variable cost, right? Like, what's the price of your streaming YouTube video? Or what's the price of some manufactured box of macaroni that's 5% food and 95% marketing? If there's only one Mona Lisa in the world, and if I increase the amount of money in the world by a factor of 100, don't you think that the value of the Mona Lisa would go up, assuming that lots of wealthy people wanted it?
Inflation is our problem, but we have the confounding variable of the average person is being told by sort of the mainstream media, by the government, hey, inflation's not a problem. They look at their basket of Netflix and bread and whatever, and it all seems fine. They're getting their stimulus check. There's no worry. But the reality of inflation is completely different, and we're now seeing a break in the narrative from the government saying, well, actually, inflation is, twice what we thought it was, and that may be just the tip of an iceberg that's coming.
Cash is trash. It's Ray Dalio's quote. Why is cash trash? Well, if the money supply is expanding at 7% a year, then the risk-free hurdle rate is 7%. If you don't generate more than 7% yield on your cash, then it's devaluing. So from 2000 2010 to 2020, the money supply expanded at 7%. So all the cash you're holding is losing 7% of its value, assuming you have a 0% interest rate or zero yield on the cash. So you can imagine the traditional world, you invest your cash at 3% treasury yields. Somewhere 15, 20 years out, you're going to lose half of the shareholder value in the treasury if you do that. People might hold their nose. But after March of 2000, the money supply is expanding at 24%. The interest rate's zero. So now you have to put a forecast in place. At what rate will the money supply expand? If it expands at 20% a year, and you're going to generate zero in treasury yield, then you're looking at cutting your treasury purchasing power in half in 3.5 years. You have to find a way, if you're going to have assets, to get over the hurdle rate. Another way to say it is, I have to invest it in a strategy which is going to appreciate faster than the money is devalued. If the money is devalued at 7% a year, then the S&P 500 index better yield 9 or 10%. If it yields 10% and the money devalues at 7%, you're plus 3. You can save money in an S&P 500 index fund. You can't save money with bonds unless you're buying bonds and the interest rates keep getting reduced. If you bought a bond at 4% yield and the interest rate got taken down to 3.5%, the bond trades up. And when the interest rate goes down to 3, it trades up again. And when it goes down to 2.5, it trades up again. When the bond rates or the LIBOR, the short-term bond rate and interest rate goes to 0, you can't take it down anymore. So bonds won't hold value either. So now you're in a conundrum. I have a lot of assets, but I'm not beating the hurdle rate, and the hurdle just tripled. This is the problem that a company that's cash rich has, and it's a problem that anybody that works for a salary has, which is I generate a cash and the currency is being devalued every year. The real question is, what's the rate at which it's devalued? So companies that grow faster than the rate of monetary inflation, faster than the 7%, they could hold value. A company growing 20% like Google, Facebook, or Amazon, they all hold value. In fact, they accrete value. Why? Because 20 is more than 7, right? So it's plus 13% a year, right now. The problem today is the currency is being devalued at 20% a year, not 7% a year, right? I turned up the heat in the frying pan. And the second problem is some stocks could hope to grow 20% a year. Like the minority, 5% of them could grow 20% a year for the past decade. What percentage of stocks can grow 30% a year? Because now you got to grow 30 or 35% a year because the hurdle rate just jumped. Now you're pushed out on the risk curve here. You got to take massive risk as a company to grow that fast. You got to do acquisitions. You got to burn the candle on both ends. You got to take on massive new leverage. This is squeezing. Value stocks don't work, right? I mean, it squeezes you out of the value stock trade because if the company is reliable and it's growing its cash flows 5% a year and the money supply is expanding at 20% a year, cash is trash. Back to my story, right? Why is cash trash? Because I had a value stock with a lot of cash and the money supply is expanding. And so how do you solve the problem? And the solution to the problem is you convert your assets from a weak currency that's inflating into a strong currency or a strong asset, if you will, that is deflating. Right? What can you do if you're a modern business person, right? If I can't convert to dollars, the next best thing is buy something tangible that won't lose 80% of its value overnight. Buy a boat, buy land. Traditionally, people bought other tangible assets, gold, right? Something like that. But if you buy an asset which is valued based upon its expected future cash flows that are in that collapsing currency, that doesn't work for you. Like, you could own every good business in Venezuela. How's that going to help you when the Venezuelan currency collapses by a factor of 1 million? Jesus. It won't. Okay, so what's Bitcoin? Well, Bitcoin is the strongest asset the human race has ever invented. It's like gold with none of the defects of gold.